Is it finally time to buy Delta Airlines stock? The stock has crashed 60% since the pandemic and has since rebounded. So, the question is, are airlines attractive? Will the rebound continue, or will the stock begin to decline from these levels? Stay tuned to find out, and we'll be talking about that and more on today's episode. How's it going? Welcome to Everything Investing. I hope you're doing well. But with that being said, let's discuss Delta. This company just reported earnings at the time of this recording on Thursday, January 13th, before market hours. And they ended up coming in at $9.5 billion in revenue versus the $9.2 billion that was expected. And if we are to compare this to pre-pandemic levels, it translates to about a 17% decline in revenues. On the adjusted earnings side of things, they ended up coming in at 22 cents per share versus the 14 expected. Now, I don't necessarily think beating Wall Street's expectations is a telltale sign to add Delta to your portfolio, but it might be worth paying attention to as their 2022 guidance hints towards a profitable year despite the early challenges of Omicron. Actually, since they've reported earnings this morning, the stock is actually up 2%, which is nothing spectacular, but indicates Wall Street was happy with what they saw from the earnings release, and we'll talk about that here in a second, but first, we're going to come over here, we're going to talk about the financials. We'll take a look at their margins and profitability, or lack thereof. We'll take a look at their stock chart, and then we'll come up with a valuation for Delta Airlines so you can determine whether this is something to put into your portfolio or not. And if you enjoyed this video and the investing perspective, please click that like button to support the channel, and if you haven't already, please consider subscribing. So let's start with the analysis, the stock price, stock overview. We'll take a look at the fundamentals, the likely upcoming dividend, and then you'll see whether or not we as retail investors can find better businesses to add to our portfolios. Looking at the stock price over the last decade or more, Delta did pretty well over that period of time, up over 300% or so from the lows. However, those who bought up here didn't see the returns that they may have expected given the recent climb at the time, as the stock hasn't really moved much since 2015. So long-term returns have been decent if you've bought anywhere here under $30 per share. As for the dividend, this was cut but could return within the next few years. The forward-looking PE is 19, which indicates a 5% expected return, and they have just announced they expect their fiscal 2022 year to end profitable. But is that enough to warrant an investment? That's something we'll discuss here in just a moment. Let's do a quick overview of the business. They earn their revenues from three segments, right? We have passenger revenues, we have cargo revenues, and then we have other. Passenger revenues is made up of mostly from airline tickets sold to consumers traveling in both business and economy classes. Cargo revenues are made of non-passenger air transportation, and other is made up of Delta's oil refinery subsidiary. Other revenues are also comprised of their loyalty program revenue, which is the key as they plan to grow this portion of the business into 2024. But there is no competitive advantage when it comes to Delta. Their costs are heavily dependent on what fuel prices they have to pay, which has been increasing of late, and therefore margins, growth, investments all have limited upside, which is the reason why the stock price hasn't gone anywhere since 2015. Now, Delta have listed a few reasons as to why they believe you should invest in them. They mentioned their cancellation rates, trusted consumer brand, best-in-class service, profitability target for 2022, but at the end of the day, everyone has a great position in that sense, so there's nothing special there. In terms of their earnings and cash flows, their earnings, as you can see, have been growing quarter over quarter, and as for 2021, they are cash flow positive. And currently, they're balancing their situation with COVID, and okay, if we look at their long-term return on invested capital, yes, it has reached the 2024 target, but then it has crashed in hard times. And the thing is, with Delta, bad years are guaranteed, especially with the airline stocks and the airline industry in general, as they have high volume of competition in the industry, which eat up each other's margins. Instead, the time to buy is when there is mass amounts of pessimism surrounding the stock, as it was the case way back in 2010, 2011, and also in 2020. Not when there is huge optimism that the sky is the limit from here. And as Ben Graham says, obvious growth does not equal obvious profits. If the recovery situation improves, it's possible the stock can go up to $50 or even $60 per share, but then you'd have to sell it. If the situation doesn't improve, the trend can continue for a while, which really is the risk and reward of investing in airlines and particularly Delta. They're also focused on paying down their debts and investing for international growth. But look at the competition, all focused on paying down their debts and reinvesting into the business, all optimistic of recovery, and that's the unattractive part. There's no real moat. It's lacking significant cash flows. It's just not a buy. That being said, they did some good things. They had record customer engagement, accelerated revenue margins, and a new American Express partnership. Looking at the fundamentals, they have about 500 million in operating cash flows for the quarter after adding back in depreciation, amortization, and balance sheet non-cash costs. And if we compare that to the market cap of 26 billion, that's a ratio of 52 times operating cash flows, which is insane. But when I look at what they do with the cash flows, you can see that they're heavily paying down their debts. So the operating cash flow doesn't really have the opportunity to reward their shareholders, which explains the business and how things work. At the end of the day, that's a high risk for a relatively small reward for a cyclical stock that will have negative earnings in bad times, as you can see here. And therefore, I would say I would trade this stock, but I wouldn't invest in it. But just before we end this video, let's take a quick look to see if the stock has any technical setups that we can play or trade. So right off the bat, we can easily see over the past few months, ever since December of 2020, really, the stock has been range bound. And what I mean by this is we've been coming down to support down here at around $35 per share. We've been rebounding up towards 50 to, let's say, $45 per share, and we've just kind of been bouncing in between for the past 2 years or so. So for those of you who are interested in options, what I do personally is I sell options. I like to sell premium. So anytime the stock comes into this $36, $35 range, this is an amazing time to sell some puts, sell premium. If you're into buying options, again, you can purchase options here, buy some calls, ride them up to that $45, $49, $50 price range, and then if you want, you could play puts onto the short side once it gets up to this levels, and you could have been doing this for the past year or so and have made some steady income. Again, this was another opportunity right here in December, just this past month, where you could have either bought some calls or you could have sold some puts. As for buying points, I wouldn't be purchasing this stock anywhere above $30. Like I said previously, I would be looking towards this low that it put in here from the COVID lows, around $19 to $20 per share if I was looking to buy. And that's pretty much what we can see if this price range breaks down here. We'll probably see first 25s, and if that breaks and doesn't hold, because it looks like there is some support here, we can see just anywhere lower, which would be probably around this $20 and $19 per share level. That would be a decent buying opportunity, honestly, for a cyclical. But other than that, that's the analysis for this video. Thank you for watching until the end. I hope you enjoyed this video. If you're interested in this type of content, please leave a like and consider subscribing. And until next time.